great to have you here. I mean, obviously we have a lot of things. Sadly, again, I can't take 3 hours, so we're going to try and keep it punchy. But I would like to hear, before we dive into some of the specific issues, your broad sort of sense of what are the big trends and themes that you're spending a lot of time thinking about at the moment.
Sure, thanks, Robin. I guess there's a handful of things we spend our time thinking about. At a very high level, I think the most important theme for the next decade is just the fact that there's all these big industries, finance included, of course, that the way they run right now is just very far off from the way they should be running if they were using technology optimally. So I think there's just a huge gap between how the biggest industries in America currently run and how they will run with the best IT and with the best computer science. In general, aside from that, we're doing a lot of things in genomic sequencing and cancer and healthcare IT, doing some things in transportation as well.
Yeah, so transportation, that's a very sort of boring way to say what you're actually doing, though.
There's a few things there that are pretty crazy. I think the Hyperloop probably is one of the most interesting ones.
Yeah, I mean, let's spend a bit of time on that just because, I mean, there were recently some tests, I think. I mean, MIT, for example, sort of presented their first little pod. I think in August this summer, there's going to be maybe some tests on like what actually works.
Yeah, I think, we just showed off a few weeks ago in the desert how you can accelerate, over 100 miles per hour in 1 second, which is really important to be able to do because when the idea of the Hyperloop, as a lot of people here probably know, is you have these big steel tubes basically, and you take most of the air out of them, so it gets rid of all the friction. So once you get going, it stays going really fast, and so you just have to have a thing that accelerates it once every kind of quarter mile or so, it looks like. And so you want to be able to travel about 700 miles per hour in these tubes by just kind of using maglev type transportation every once in a while. So proving the transportation system works was a big part of the test that we did.
Yeah. So but what about corners? And the idea that between San Francisco and Washington, there's
yeah, there's a couple of
there
things.
will be some corners.
If you turn more than about 1 inch every 20 feet when you're going 700 miles per hour, it gets very uncomfortable. And in fact, everyone dies if you do more than that.
Okay.
So that's probably an issue. There's
suboptimal, basically.
It'd probably be a lot easier to do this in China because they could just knock stuff down.
Yeah.
And build stuff. Maybe Trump will do that. I don't know. I shouldn't be calling our politics. But basically, sorry.
The Trump train.
But I mean the key thing there is tunnels, right? So you actually need to be able to build tunnels cheaply. And if you build a subway tunnel, it's rather expensive because there's a lot of air that the train has to move out of the way. But if you build a Hyperloop tunnel, it can actually be a lot smaller. But there's actually another angle to this that syncs with Fintech, which is kind of cool, which is that the way you get the Hyperloop done involves a lot of financial innovation.
Mm. Tell me a bit more. So you run prizes, right, to encourage this?
Oh, there's different ways of doing it. The Hyperloop one that I'm working on, we've raised about $120 million and hired a couple hundred engineers and are actually just building it more like a traditional company. But there's a lot of open source things that our friends are doing to try to encourage innovation. But the more interesting thing is like how do you get these things built? So for example, when Hong Kong built their subway system, they actually used the arbitrage around changes in real estate values to fund it. My favorite example we're looking at right now is if you look at Long Beach, there's a port there that's on about $200 billion of land, and they can't hire any more people because there's not enough room. So what you can do is you use the Hyperloop to move the port 100 miles into the desert where the land costs nothing. And then you end up having a much bigger port, and you could free up $200 billion of real estate value. So there's lots of ways you kind of use financial innovations and structures to build these things that could be interesting.
Oh, well, that is... But how feasible is this going to be? That, I mean, you can play around with the financial side of things, but...
I think that's the key thing. I think it's quite feasible. Most of the cost is just the steel to build these big tubes, and then the variable cost of running it. It's just a much more efficient train. It's better for the environment. It's better for living near a city and getting in really fast. But we have to figure out the real estate arbitrage to really make it worthwhile.
Yeah, because it's going to be hard in built-up areas where it would make most sense to build a Hyperloop.
Yep, but if you have land that's worth nothing, that all of a sudden is worth a huge amount because you're suddenly 10 minutes from San Francisco or New York, when before you were an hour and a half from San Francisco or New York, that could actually change a lot of things. So that's pretty fun.
Yeah. Do you think there'll be maybe other countries that the US, it's maybe hard, especially San Francisco, LA is a really built-up area that maybe some of the technology you find here you'll be able to use?
Yeah, the biggest challenge in the US is that there's this extra step where it's about a 5 to 10 year, $10 million environmental review. We have a very strong environmental lobby in the US that a lot of us respect because it's good for the environment, but it takes a lot longer and a lot more money to build things here because of that. And so it may be tested in other places first.
Yeah, exactly. Yeah. That's going to be interesting. So will I get a trip on the first one? As long as you don't, I think that turn sounded a little bit scary.
I think our CTO wants to do the first one, and I've told him that if he kills himself, he wasn't a very good CTO anyway.
Yeah, exactly, yeah. I bet he loved that joke, right? Yeah, exactly. Well, let's move on to the financial technology side of things. I mean, the reason why we're here. It'd be interesting to see where you think what the broad movements are. I mean, it's interesting that we talked a little bit about this, but payment companies. I mean, there are a lot of payment companies out there, but where are people maybe not doing as many cool things?
Yeah, sure. And I'm probably unfairly biased against payment companies. I think there's a lot of really cool innovation there too, and quite a few things I'm seeing. When I worked for PayPal when I was quite young, and while I was in school, and afterwards I was working with Peter Thiel, and he made me see about 2,000 payments companies that wanted to meet with him, and I got a little bit tired of it after a while. But I do think there's areas of finance where, unlike payments, there's almost no one working on still that are really important. So one example I gave earlier was one of these, a company, Blend, I work with, is working on better technology for mortgage origination. So there's like $13 trillion in mortgage-backed security market. There's about 1,000 banks, 60 really big ones, that are trying to do this origination stuff themselves. And obviously they shouldn't all be building their own systems. There should be other systems they're using. So there's 2 or 3 competitors in that space, which is a lot more interesting to me than a space with 2,000 competitors.
Yeah, well, yeah, certainly. But let's spend a little bit Adapar as well, one of the other companies you founded now. I mean, that's in the financial service technology. So that's a platform for wealth managers to basically do everything they need to do.
Yeah, sure. So the genesis of that is that I guess the view in Silicon Valley is you try to build and own these things that can own their own platforms and become very large platforms. And when we're looking at finance, we're looking at how the big banks work. They each kind of are their own walled cities and don't really share data. So you've had a lot of kind of financial infrastructure grow up in the world in these very separated, very kind of hard to work with ways. But then you have lots of wealth advisors and groups that have to talk to all the banks, have to talk to all the custodians, have to talk to all the fund administrators. So it becomes a really hard data integration problem, and it becomes a really hard, frankly, operating system problem for how you can build stuff on top of this. And so what Adapar does is it's the main software that a lot of wealth advisors use. So a lot of RIAs, a lot of the bigger banks are starting to use it as well. And it kind of creates the financial infrastructure to get all the data in one place, and then it lets the advisors do all their reporting and all their work on top of it.
So what was the spark behind Adapar?
The spark was that Palantir was the first company I was working on, and the guy who was running the financial side of Palantir with me. Palantir, about a quarter of their business is in global finance. We do a lot with the banks, and we were replacing systems at some of these banks from like late 1970s. Actually, this was 2006. So it's amazing how long a lot of the technologies you all know has been around at the banks that you've had to build on top of over the years. And the question was, how do you fix this kind of like huge mess of financial data? How do you kind of hack into finance at the root to kind of get things to be more data driven? And our insight was that the technology that powers wealth management right now is also very broken and very old, and that money kind of sits at the base of global finance. And so if you can be the platform that powers and sits on top of a huge amount of the money, then you can actually build other things on top of that and end up making the whole thing more data driven.
So is it more individual sort of financial advisors, or do you, I mean, because a big one like a Charles Schwab probably has its own system and is not particularly keen on sharing.
They'll integrate with us. So they'll send advisors to us to work on it so that we can use their stuff. So we sit on top of them and Fidelity and others. But right now it's $500 billion in assets, which is still small, I know, relative to a lot of people here, but it's growing pretty quickly. It's about 200 RIAs, family offices, and then a few of the big banks are getting on it as well right now.
Oh, really? Which big banks?
I think I'm allowed to mention Morgan Stanley. I'm not sure the other ones I'm allowed to mention. Okay. I'm always getting in trouble on this.
Well, feel free, I mean, we're all friends here, right?
But no, I think we're doing some really great work with them, and there's a handful of others as well we're starting to work with.
That's interesting. How do you find dealing with the banks then?
Well, the banks, I'd say in the last 5 or 10 years, are a lot more interesting to work with for people from Silicon Valley. I think they've realized there's a lot of things they're doing that should be utilities that they used to think of as competitive advantages. So to me, that's one of the biggest themes here in New York in fintech right now, is that a lot of banks used to think this is my competitive advantage, and now they think I'm doing this, 10 other people are doing this. I know I'm not going to be the very best at this. It doesn't even matter that much. How can I partner with outsiders? How can I make this into more of a utility and just hugely cut my technology spending? So I think that is like a really big theme for fintech in New York.
How are they quick to do things, or do they feel slow and bureaucratic? I mean, I assume it's slightly different timescales than what you.
Well, yeah, it's a little bit unfair because they're dealing with trillions of dollars, and they're not really allowed to. I mean, they still have to have their 6 to 12 month security reviews before they install stuff, which to us seems like a lifetime. But I think there's reasons why they go more slowly. But I think there are lots of groups within these big banks that have created like different types of SWAT teams and have started to move more quickly on certain things once they decide they need to. So I've been generally pretty impressed with how the bigger banks are thinking of themselves a lot more as technology companies and trying to shift that way.
That's interesting. Do you think that is this? I mean, it's a very trendy thing to say. You know, I've seen lots of banks, and you know, I love lots of hedge funds call themselves technology firms who just happen to manage a lot of money. But is there an element of, you know, desperately trying to be the cool kid in class? That these banks are still fundamentally financial services companies that, you know, manage deposits and banks, and technology is important to them, but them trying to rebrand themselves, oh, we're a tech company. It feels a little bit.
I think there's an understanding by a lot of the banks that if they're going to be around in 10 to 20 years, they have to figure out what their barrier to entry is in this world and what their competitive advantages are. And I think they all have a lot of data that gives them these really interesting moats. But if they don't conceive of themselves as technology companies with how they use that data, then they're not going to have those moats in the right way that they're going to be able to keep growing. So I do think it's like a competitive necessity to think of themselves that way. There probably are some of them who are just saying it because all the other cool kids are saying it. But I think the ones that are running well are really thinking of themselves a lot more as technology groups.
Yeah. And you mentioned that Palantir, 25% of its revenues come from the financial services industry. I mean, what exactly are they doing for them? Without giving away any sort of secrets.
No, sure. So I was there the first 7 years, and so I'm not as intimately involved. When I was there, our first contract with a big bank was because they had bought a bunch of other banks, and it was integrating a bunch of them into it. And the whole data integration IT services challenge is something that came up a lot in government, and it is an area where we tried to productize a lot of this, and we're able to do it a lot better and a lot more cheaply. And so it turned out it was an isomorphic problem in the financial services area. Similarly, the next big problem we faced was actually something in mortgage-backed securities where they had a multi-trillion-dollar portfolio and they had tons of data sources, and they were going to pay one of the integrators $500 million to integrate all the data sources and build their system. And it was going to take 9 months, and it turned out that the technology that we'd been using in the government context also could do that for them much cheaper and much more quickly. And so I think really what Palantir did as a company is it focused on productizing IT services for systems that involve lots of analysts and lots of heterogeneous data. And in 2 areas of the world where you have lots of these systems and lots of the spend are government and finance. So it's very natural that it'd be working in both those areas.
Yeah. I mean, what about, so there was a recent BuzzFeed article, they had some internal documents. I know you're not directly involved in the company anymore, but, you know, as an interested party, it'd be interesting to hear your thoughts on how you think that company is going to evolve. I mean, it's one of the biggest of these unicorns.
Sure, and I shouldn't speak for them again because even as a founder, I'm not as intimately involved. I did write a piece in response to the BuzzFeed article. I think Peter Thiel thinks of a lot of things in terms of the 0 to 1 and 1 to N framework. And so Palantir went 0 to 1 in a few areas, and it wanted to prove it can go 0 to 1 potentially in a lot more areas and then scale them. So over the last 4 years, it's gone into a lot of new industries in which it's like seeing if it makes sense to go from 0 to 1 there. And it's had some very big successes in those industries, especially in healthcare tech with insurance companies, in the oil industries, and a few others. There's also been things it's tried that it decided it was not a good fit for, and so it could focus instead on scaling the areas where it's working. I think what the BuzzFeed article said is there were 3 companies where it had failed. And it was like, this is a really big deal. It's filled with these 3 companies. I mean, Palantir has like 100 big companies it works with. And so the fact that they tried to make it like it was failing for not working with 3 companies, to me, when it's trying a lot of things, it's pretty silly as far as I'm concerned. But I mean, you can take data and you can tell a story, and it's, you know, it's a more interesting story if it's negative.
Yeah, well, you know, as a journalist, you know, that's what we do. I'll stick up for BuzzFeed. You know, I thought it was an interesting article. So. I mean, one of the aspects, it was interesting, I was talking to a couple of CEOs of some big traditional money managers here in the US. Mm-hmm. It was interesting that there's been lots of focus on, you know, the flow from active fund management they're not doing very well to passive ETFs and trackers. Yep. But I remember talking to one of them, he made the point that, you know, we still have really great margins. I mean, they're coming down, but they're great. And frankly, if I was outside the industry, I'd look at the asset management industry and say, I can probably, you know, your margin is my business. Who was it that said that? There. I remember. But yeah, have you looked at the asset management industry? Are there any particular niches that you think are more primed for a bit more disruption than others?
Sure. So Adipar actually kind of partners with a lot of the advisors, and it helps them out. But I think, I think a lot of the fiduciary stuff personally makes a lot of sense where you should be charging for things that are aligned. So I think that. It's actually amazing to me that there's asset management industry that's still charging things for churning your account. So I think that's all shifting the right direction and is and is going a good way, and the margins are coming down there. Silicon Valley has about 20 robo-advisor companies that I've seen over the last few years, and I think some of them are very well run and are good companies. I haven't invested in any of them, and I'm not that bullish on them as a space because I think it's much more. I think it's not a hard technology problem. I think it's much more about your brand and who's trusted and that sort of thing. And so I think things are shifting to more passive. I think the margins are coming down, but I think that at the high end, if you're managing $100 million, $1 billion portfolios, there is a lot of human intelligence and a lot of alternatives needed. So I think it's going to be expensive for a long time still.
Yeah. But so you've looked at these robo-advisors and decided maybe not. I mean, isn't sometimes simple technology the best technology as well?
Oh, sure. I think it's a good thing. Like in terms of like, if I have like $10 billion to manage, would I put like a few billion potentially into beta exposure that's managed through robo-advisors as cheaply as possible? Sure, it's not a bad idea. Would I try to build a robo-advisor business as a 21st robo-advisor business? Probably not, because I think any of these groups with a small team of engineers could build a great robo-advisor. I don't think, at least the robo-advisors as they exist right now, are not hard technology problems. They're much more about brand than they are about technology, is my view. So it's just not as interesting from a venture capital perspective to me.
Oh, that's interesting. Yeah. So any others of niches, sub-niches that you're spending a bit of time in without giving away, tipping your hand, of course?
In the financial area, I think one really interesting trend you're seeing in Silicon Valley is that a lot of other companies are becoming fintech companies in order to do a better job. So, I'll give an example. One of my companies is booking tons of remodeling through contractors. So we have 1.3 million consumers a month booking contractors to do work on their homes, and there's a few $1 billion a year being booked. And right now, it's only 1% of the market. There's $300 billion a year booked in the U.S. And in order to get the consumers to convert better, we're trying to figure out how to give loans ourselves, as opposed to them coming to the site, booking it, and then having to go talk to their bank. Because the origination itself is probably worth 50, 100 basis points. So, but there's a lot of things like that where the thing that used to be you stop and you go and you walk into the bank and you try to get a loan is now going to become like a point online where the technology companies themselves that own the consumer in this process are going to be the ones that own the financial part of it too. So I think it's a really important trend for how these companies figure out how to partner with the financial world on things like that.
One of the buzzwords I've noticed very much in the financial industry is machine learning, but basically using some more modern artificial intelligence techniques in everything from investing to solving problems that they have on the consumer side, asset management side, whatever. How much of this is, to return to this, of the cool kids trying to sound with the times, as it were? Machine learning is very much du jour. But do you think, is this the future? We're going to see more things move that way?
Yeah, that one I'm more skeptical of a lot of the efforts I've seen in Wall Street. So it might be a little bit more of the cool kid syndrome. I've had several kind of CIOs of big institutions ping me saying they will have a big machine learning project and can I connect them to the right people for what they're doing recently. I mean, machine learning is a tool that all the great technology companies are using now to get done certain things. When you have a bunch of data, you need to figure out what the best answer is. I think you apply it. I mean, it's kind of funny, right? Because it's artificial intelligence, and once it works, we call it machine learning, and there's all this research on the AI front. And I'm definitely bullish on what AI is making possible, but I don't think it's like this panacea or this thing that solves everything. I think the harder problem, frankly, is getting all of your data organized in an infrastructure where you could use it for the problem. So I think the hard thing to say is, what data should we be using to solve this problem? What is that process? And then once you have all the data organized, you could hire a single PhD from Stanford and he'll do your machine learning thing for you. That's not that hard. The hard part is getting it organized and figuring out that it's relevant to this process.
Yeah,
I think so. It's much more of a strategy and process question to me.
But you think that there's going to be more, on artificial intelligence. I like that definition. Artificial intelligence is everything we haven't been able to do yet. Everything else is duh. But how much will we be able to do in the future? I mean, looking forward a little bit.
Sure. So I definitely have a few investments in artificial intelligence companies that are trying to push the boundary and change things. I think that, I was actually really surprised that Demis and the team at DeepMind were able to solve the Go problem. I think that was pretty impressive. But even looking into it, it's not really capturing, in my view, human creativity or anything even close to that yet. So I think we're still decades and decades away from needing to worry about being replaced. And I think the much more interesting problem that we're focusing on kind of the next 10 or 20 years is how do we organize we organize our infrastructure of our companies to get the data structured and available to use it for decisions. And I think it's not going to be the people who are best at AI and machine learning who win. It's going to be the people who are best at that data infrastructure and process problem. Because I mean, most of the top companies in Silicon Valley, like linear regressions and things, get you like 90% of the way. I'm not seeing a lot of like really, really hard AI that makes the big difference for at least the things I'm seeing.
But the kind of the approach that DeepMind use with AlphaGo, I mean, it was quite. So obviously, it's not human creativity, but when I looked at it, and I'm hardly an expert, it did seem to be one of the closest things we've gotten to a bit of human intuition, as in it made, it's the rules, but it was interesting that they managed to do some things, do it so quickly. I think, the week before, Zuckerman had talked about, we think we'll be able to beat Go in, a few years' time, and then boom, you had DeepMind out there. It shows how quickly things are evolving. So if just in the next few years, what do you think, what kind of challenges and solutions are we going to be seeing?
I think the vision stuff is the most interesting in the next few years. So I think you're going to be able, so you're already, the way DeepMind's making the most money right now is it's helping with YouTube search, right? So you're already kind of able to take videos and label things better. I think you're going to be able to run that in reverse. You're going to be able to generate really cool 3D videos and 3D worlds through VR and stuff, like using this AI that's gotten a lot better. And so there's going to be some kind of fun stuff there. And obviously it's affected quant trading a lot, and there's a lot of better ways to you do stuff like that. But I still think even with that, there's a huge part of finance where you need people's minds. You need to have the macro. You need to have the human intuition. So you're not really going to replace people in most of these areas for a long time, is my view.
Yeah, well, that's good, Lee. So I have to admit, I talked to a natural language processing company the other day, and seeing what they can do with automated writing was a little bit scary as a journalist.
You can replace journalists.
Well,
maybe we'll replace journalists.
Yeah, exactly.
We'll still have the computer to be negative about everything.
Yeah, exactly. Well, this is it. Yeah. Thanks for that. Yeah. Well, hopefully it'll free me up. And I'm a big fan of the man and the machine marriage that putting together. Ideally, in the next few years, it will just be taking away my boring parts.
Exactly.
Yeah, I don't. Yeah, snark machines aren't good at snark yet. So
they're not.
Maybe that'll be our last bastion. The kind of the resistance will find itself way there. One of the other projects you mentioned, which I'd not heard of, but sounded fascinating, but OpenGov. Just because I'm interested in how we use data and technology to change these things, especially on the public services side. Can you tell us a little bit more about that?
Sure, and that's another interesting area where it's kind of fintech as well, but it's for government. So OpenGov is I guess the third company I built with a few of my friends, and it's in about 1,000 cities right now in America. It's in a lot of cities and districts, and we're basically helping them access their system. So that the history there is a few of us tried to start a philanthropy to help government use its data better. And we did a lot of stuff with states and got a lot of attention for showing how California compares to certain areas. They're very efficient. Certain areas they're kind of very wasteful and abused by special interests. And a lot of cities were interested in this and said, "Oh, can you do this for us too?" And we said, "Sure, send us your data." And the city said, "How do we do that?" And it turns out there's like $10 billion a year in America spent by cities on these kind of 20, 30-year-old back-end systems that haven't really changed much in a long time. And if you're a mayor or a city manager, you don't really have access to your data. If you want to say how much are we spending on police and fire relative to 10 cities nearby us, or what kind of, how do we compare to other groups, you can't do that right now. You have to pay consultants huge amounts of money to get that information. So we decided to go in and kind of replace the kind of financial back end that in terms of how they do their budgets, how they see what they're doing, how they kind of do all their open data. And so we've been having, there's a few different companies in this area. I think there's been a lot of traction lately in kind of teaching government how to use data better, how to hold themselves accountable with it.
How are they doing that then?
Well, the key thing is really, to me, is the budgeting processes. So we're rolling out a lot of stuff for when you're doing your budgeting. There might be 3,000 areas you're spending money in, and you could say, look, this area relative to kind of the basic model of all these cities like us, we're doing really well. This area we're spending twice as much. And sometimes you're spending twice as much because there's some variable we're not accounting for, and it makes perfect sense. This is where it's the man-machine thing again. Sometimes you're spending twice as much because it's a service that's being run by the cousin of the ex-mayor, and so maybe you should look into that.
Yeah, that does happen in some smaller towns as well.
Yeah.
But do you think, is this going to be something we should be watching in the next few years? Government has been putting, whether it's from municipalities or some federal government, putting more and more information online in machine-readable formats that we'll be able to do a lot of things a lot better and more efficiently in the future then.
Yeah, I think the key thing with all this open government stuff is it's one thing if you just put all these PDFs online, and then like nothing happens because it's so complicated, and it's like it changes maybe a little bit if there's a really good investigative journalist who spends a lot of time and finds something, but for the most part, it goes up and then there's a big nothing. I think the key thing is actually building processes into how you're running government or how you're running these organizations that's leveraging that data, and it's automatically doing metrics and KPIs and comparisons based on that data. So if you can create processes that are driven by technology, I think that's how the open data stuff starts to really work its way into the system.
Yeah, it's quite exciting. And so it's 1,000 cities now.
It's 1,040. I checked with them actually last week. So it's pretty cool. Mark Andreessen and John Chambers are on the board with us and been great mentors there. So it's been interesting.
Okay, that's cool. And one thing also not fintech related, at least not directly, but genomics. What are you doing there?
Genomics is really cool. Genomics has become a computer science problem. I'm sure a lot of people here have been watching it. So it's very fun. It used to be this kind of like obscure life sciences area, and it was now that you're able to get lots and lots of really clean and good data from this space, it's one where the very best computer science teams are kind of the ones that are driving and pushing it forward. So there's a couple different things there that are really important that are probably actually of interest to everyone here who has basically. If you're in your 20s or 30s, you should probably get tested, because about 2% of people in the country have a very, very high risk of cancer in a lifetime. It'll be between 50 to 80% chance they're going to get cancer. And there's a lot of things you could do to protect against it and prevent against it. So, and this used to be like a several $1,000s test. With companies like Color Genomics, it's now like a $300 test. And so it's totally crazy for everyone not to do this, because you actually can discover things and protect things. I actually had someone very close to me who took this test, and she has a very high chance of cancer, unfortunately. So we had her whole family do it, and her mom came up as a very high chance as well, who's 60. So the doctor said right away, you better have your ovaries removed. And unfortunately, when they removed it, they found early stage cancer. But thank God we checked and did it. So I think it's really important that the people the healthcare system takes about 5 or 10 years sometimes to actually like take the best practices and make them scale and make it available to everyone else. So it actually kind of behooves everybody to be aware of what's going on, and the fact that there are these tests that are really important, that can actually save lives, that have not quite yet become standard. So I think the sequencing area is fascinating right now.
That's interesting. So which companies do you have in this? So what was it called?
Well, I think Color Genomics is one of the most interesting ones. So the founder, Elad Gil, he built Google Mobile and Maps and whatnot, and he sold his last company to Twitter and senior there, but he's also a PhD in biology. So he's a really cool guy, and he's brought together a lot of our friends in the Valley to build, I think, one of the strongest teams in this space. Another one that's really becoming big is something called Guardant Health. Guardant Health is basically, you take a little bit of this is an interesting area, but you take someone's blood and you could test the cell-free DNA, and basically if they have cancer, the DNA will be there, and you could learn about it, and it actually detects if you have stage 2, 3, or 4 cancer as well. So right now, because of the FDA, you have to have a doctor order it, but this is another way you could detect actually if you have cancer. And you probably saw Bill Gates and Jeff Bezos just invested a bunch of money in something called Grail, which is also in that space. Both of these companies are on top of Illumina. Illumina is the public company that does most of the sequencing. And so Grail basically is trying to develop something that'll become common to give a little bit of blood and see if you have cancer or not. So this stuff's all advancing pretty quickly right now. It's really cool.
Yeah, that does sound pretty cool. Yeah, no, I was quite struck with, I don't know if you saw the 2 quants on the Kaggle competition with heart palpitations. I mean, just using data, you can find out a lot of things.
Yeah.
I'm wary of being too greedy with my questions. I'm sure you guys also have some. So I don't know if we have somebody that can read them out, or we can even...
Yeah, we have some questions from the audience. Which industries in the current world of finance do you see changing the most radically? Are there asset classes you see not existing in the future, or transactions that'll look totally different in the future?
That's a good question. I think we're already starting to see that the way people give and get loans is going to kind of be abstracted out of a lot of the banks into a lot of these specialized organizations. And so I think that's one that is accelerating. And right now it's still really, really tiny because the banks kind of own that whole industry. Like sometimes we forget in Silicon Valley that we're like kind of like the little kids of finance, because the amounts of money we're playing with are really irrelevant sometimes. But that's one where there is this exponential growth that I think over the next decade you're going to see a lot of the loans and the credit in general not nearly as controlled by the banking system, which would be actually a pretty crazy shift relative to what we had before. So I think there's that, and then I think in general, like a lot, I mentioned this earlier, but a lot of the technology that runs global finance is becoming utilities and becoming tech platforms, and are going to be spun out from the banks. In some cases, the banks will do this on purpose and will own a piece of the resulting kind of platform. In some cases, it's going to be Silicon Valley companies that come in and provide this and win. So I think just the way that all financial technology looks 10 years from now will be very, very different, where there'll be a lot of these external platforms that actually are worth more than a lot of the big banks in a lot of ways, and then a lot of different companies that didn't used to be considered financial companies will be involved in the credit system.
Just picking up on one aspect of that, are there any particular industries where you just think they're going the way of the dodo? They're just dead. They just don't know it yet.
Well, I think the low-end wealth advisors probably are going to be like pretty decimated. I think there's a very strong need for good advisors for certain levels of wealth and money. But I think that technology is able to serve most of your needs for a typical middle class kind of investor. And so I do think that the low-end RIAs, which is a big industry in America, is probably in a lot of trouble as one of them.
Yeah, essentially, I'm giving a speech at a financial advisor conference on artificial intelligence and markets. So I probably won't tell them that half of them.
Well, they'll probably all tell you they're not the low end ones.
No, exactly. No,
you
they
don't really
won't.
offend anyone. With
It's an FT conference, so they're definitely at the high end, of course. Any more questions? I'm happy to ask more, but I just felt,
Yeah, we have a couple more questions.
Yeah.
As someone who's been very involved in data, are there data sets in the world that you think are underutilized, or data sets you wish existed that don't currently?
I think that's a great question. There's a few of the really. I generally am not excited about quant funds. I always try to convince my friends, don't go to a quant fund, help us build a real business, that sort of debate. But there's actually a few really smart quant funds that are using data sets to profit in ways that have surprised me and impressed me. So what happens is a lot of the most talented ones will approach our various companies working in industries. And so in Silicon Valley right now, you have a lot of these vertical platforms forming and growing that are becoming very important in different parts of healthcare, different parts of government, different parts of, like I mentioned, the contracting one. That's a great example. So the contracting one happens to know the rate of remodeling going on and the contracting activity going on in lots of different regions in America. And there's been a company that built indices based on this and uses it as a really important input. So I think in general, data from the startup world, in terms of what it says about the economy. Another really good example is there's 20 million SMBs approximately in America, and there's a lot of data coming from about the different startup platforms about what these SMBs are doing, what they're purchasing, what their economic activity is in real time. And a lot of this stuff is starting to be used by the very best quant funds to profit. And that's something that I think is very clever. It's not something I personally spend as much time on, but I think it's definitely really valuable data.
Why are you so skeptical of some of the quant funds? I mean, below the sort of top tier ones.
I think that's the problem is, I don't think you're adding that. I mean, maybe I'm wrong here because they make money, but I don't think you're adding that much value to the world beyond there being a few of them. I don't know, maybe making markets more efficient is really good, and we need a lot of smart people doing that. But at some point, being part of building and creating a business that's solving a real need, to me seems like a better use of a really smart person's time than just more arbitragers of the market. So I guess is my bias.
Yeah.
We have time for one more question, but where do you see the opportunities in insurance given your investments in Oscar and Ladder?
Oh, cool. Ladder is an early stage life insurance company that's really cool. Insurance is also a really interesting area. I think a lot of the big insurance companies here are aware that they could be using data to do their job a lot better, whether it's life insurance or health insurance. Health insurance is interesting. It's very regulated, so you can't use data to do better stuff with individuals, but you can for groups, and you also can for cutting your costs. So I think there's a ton more to do in health insurance. It's $1 trillion market. I am very bullish on Austria. I think it's going to be very big, but hopefully there's more stuff you see there that transforms it. I think in property and casualty insurance, that's obviously a very data-driven thing. So the best run P&C one is the Ace and Chubb that combined, right? So they have by far lower loss ratios than other companies. And I got to know some of the people there, and I think they're a very well-run company, but there's still a ton of data they could be using that they're not. So you still have these really big insurance companies that are not really up to date in terms of the latest data sets and data platforms. There's lots of room for disruption there, and I think it's become an area that a lot of people in Silicon Valley are focusing on. So you should expect to see a lot more new insurance companies as well as insurance technologies.
Yeah, it's interesting. And do you have a question?
Yeah, so we live in a very controlled world through national governments. In a way, we're so used to it, we hardly notice. And what you see with tech is it goes across boundaries. And now if you start to price credit out of that system and insurance starts to be something else that's done by companies that are laundering, do you think the tension between national governments and private enterprises is going to increase because they're challenged?
Yeah, I think that's a great question. It's something we talk about a lot with some of my friends in the Valley. I probably have the wrong, unfair. I probably have kind of strange biases on this. Like personally, my view is that the global central banks are all kind of like collaborating to do something that they think is good right now that's actually very destructive in my view in terms of how they're all basically in control of this credit system that, it's kind of like everyone's on drugs basically is my view of what they're doing. They just keep giving us more and more cocaine and eventually you're going to have a hangover. It's going to be a mess, So there's a lot being written and discussed about this. So my view is it's like a really good thing that because we have all this new stuff happening outside the purview of the traditional credit mechanisms and government control, that you're gonna basically take back the control from these kind of crazy neo-Keynesians that are running the whole global economy right now. But yes, that is the question. Is there's this power system that's been developed over 100 years, and there's all this stuff that's kind of coming out that's going to be a lot harder for them, and they're going to have to regulate in totally different ways. And I'm hoping they kind of ignore that for 10 or 20 years, because maybe then we could take back the control from them. But yeah, I think it's a great question.
Do you think you will take back control?
I think by it's actually the bottom-up system. So I think like the greatest wisdom of like the last 200 years is the extent to which bottom-up things empirically with markets can create wealth and prosperity better for everyone, and that whenever you do things top-down, you end up having cronyism and you end up breaking stuff. But my view is that it's really good for the world overall to be able to get around these kind of control mechanisms that have been put in place for well-meaning but stupid reasons. And so I think you're going to see it shift more out of their control in a way that's positive, is my view.
So you think President Trump would put Thiel in charge of the Federal Reserve?
I'm not gonna comment on that one.
Yeah.
Okay.
Go on. Okay. Well, I like to keep things trim. Is there one more question? Maybe a short one. No, well, great. Okay, well,
Awesome.
Ending just ahead of time. Thanks so much.
Thanks, Robin.
Jim.